All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day wherever you are, whatever day it is for you. As always, it is Friday on the podcast. So happy Friday, everybody. And as you know, as I said in the last couple of episodes, we have switched recording platforms and we continue to have learning growth pains as we figure out this new platform. So bear with me if we have any issues, but I think I got it down this far. So I'm hoping this is going to be the episode that nothing goes wrong. But with that said, we have Jennifer Ruelens with us on the podcast. She is with Hold It with PM Gens. She's a property manager, over 600 doors that she's managed over 13 years. She's also an investor in the 2 to 4 unit space, and she's over there on the East Coast. So Jennifer, thanks for hopping on the show.
So much. I appreciate it, Game.
Absolutely. I told you before we got on here, we always like to start with stories.
Yeah.
We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
2004. So I just graduated undergrad, started a business, very entrepreneurial, right out with some other people, and it failed within like 9 months. And I could always sell things, right? I sold Girl Scout cookies like a crazy girl. And so anyway, I got a job leasing apartments, and it was 300 units, 4 years old, 88% occupied, which is really distressed. And I came in there at 22 years old, leased it up to 100% in 10 months. And they were like, you can now manage this. Congratulations. It was really wildly easy to get into this business, but I worked really hard. So I had that 300 door community at 23.
Wait, you were 22 and they entrusted you to a 300 door community? That's got to speak to either your ability to sell or your work ethic. I don't know.
Absolutely. And I'm 6 foot tall, so that also helps. I find that people trust tall people more with managerial responsibility. But, I had a senior property manager who helped me and, taught me the business. But I say, multifamily, like those jobs where you're working at like an on-site office and you're just churning them out, man. I was doing like 7-8 tours a day. Getting 3 apps, doing a move-in every other day. Like, you just do it a lot, right? And if you do late rents, if 10% of your 300 tenants are late, you're doing delinquency activities on 30. Every month, every cycle. I talk a lot about reps and time in the market, building expertise. So having 10 doors for 50 years isn't that impressive. And having 1,000 doors for 1 year is also not that impressive. But having 500 to 1,000 doors for 20 plus years, you've seen a thing or two. You've figured it out. Your processes and systems are really good. And that's what I did for many years there in the Harrisburg area, is I moved up in complexity, 300, no amenity, to a 278 with like high amenity, but a C plus property going through a reinvigoration to B. And then I did a high amenity, high luxury portfolio of about 500 doors. That was 21 staff. That was like snack stands and car washes and stuff like that. And the housing crisis.
Car washes.
Yeah, these amenities that they have on these properties.
I've never heard of that as an amenity.
It's incredible. And so the housing crisis hit, and I worked for a home builder, and they were holding these properties that I was managing. And so I got kind of downsized out, and I ran to business school. So I always wanted to get a MBA full time. And President Obama had made a couple things happen that the loss of my job wasn't that financially devastating. And so I pursued the dream, got a full ride to Penn State. Anybody's looking to pursue, continuing ed, Penn State's a great place to go. And many students are on assistantship there. So anyway, got that full ride, MBA in real estate, doubled down, came out, but I met a guy here in Williamsport while I was there. I was 30. It was time to get married, and it was so wonderful. But Williamsport, like, we don't have an apartment community. So I come out like this property manager MBA. What am I going to do? And I emailed anyone who was anyone on LinkedIn. And I was like, hey, I'm here now. Please talk to me about the market. Would you meet me at my office, which was the Panera Bread? And, I'll treat you to a bagel. And one person said yes. They had a third generation real estate sales company here that was the market leader, independent, not franchise. And they said, people are asking for this. Fracking. You've heard of fracking? The Marcellus shale and fracking gas. Yeah. Williamsport had become a boom town. We were the capital of that activity here when that opened up. So things were happening here that were really exciting, and they were going to this real estate company for help. They said, you know property management. And I was like, yes, that is all I know. And they
I've
were like,
done
would
that.
you like to start this? And I said, yes. And that was 13 years ago. I've since bought out that partner and we've rebranded, but we are One Focus Property Management. And I call it that because it's all we do. We are not also selling property and appraising. And I told you, I believe in expertise. I sit here with the Pennsylvania Landlord Tenant Laws and Practices book. like
The only person with that book on their
But
desk.
if you are a client with a tenant who wrote a wacky email and isn't paying rent, I think you're happy I have the $300 book and know how to use it, right? And so that's where my
100%.
philosophy comes from, what I've done. And that's led into now my education and advocacy platform, which is Hold It with PM Jen. I'm out there with my own podcast, on podcasts, talking to local real estate groups, talking to national groups. I'll be doing that this fall. And I'm spreading the gospel of buy and hold real estate, particularly the hold part. I love people to hold that real estate through multiple cycles, managing in a disciplined way the whole time, not going nuts, not working themselves to death, and realizing all the benefits that buy and hold gives you that come about when you can hold it. Because you're not going to catch much appreciation. You don't get the full bounty of the tax benefits or leverage unless you hold it for a long time. See, we talk a lot about buying and selling. We need to be talking about the hopefully 40 to 50 years you're holding it and building that generational wealth. So that's my whole platform. Please vote for me this election.
You got my vote. I love it. I mean, I've said so many times on this podcast how important it is to find a good property manager, and also how difficult it is, because there's a lot of property managers out there, but not all of them. Not all property management companies or property managers are made the same. So, I mean, your experience kind of says it for you. So it's awesome that you are focusing in on that, because honestly, that's one of the hardest aspects of the job of investing in real estate, is managing the properties. And so you're an expert, and so you got value there. So if you were to start again, or get started in investing, do you feel like, would you suggest people get started as property management, or do you think they should right away hire a property management company? And I know this is kind of hard to answer because you're biased because you are a property manager, but you've seen both sides. You're an investor, you're a property manager.
I love a DIY investor, but I'm a rugged individualist. I'm a good American girl that way. If I were advising somebody starting out, I would give them first the advice: buy more, buy earlier, sell less, sell never, right? Okay, that's what all the old investors say. Nobody says I should have sold this, or they always say I should have bought more and I should have held what I thought I was losing on. Okay. If it depends on your goals. So Gabe, if I met a person like you, you're very serious about this, and I meet people at the beginning of their journey and they're like, I'm going to do this, then this, and I'm going to achieve the rep status, and I'm going to do all these things. If that is truly your goal and that is your passion, then pause and go get a job at a multifamily property management company for 1 to
Good
2
advice,
years.
yeah.
I talk about those reps. I talk about get a job at a company like One Focus. Learn this business. Learn how a professional operation actually makes this happen without a wish and a prayer and just making do. How do we systemize this and make this work as a business? But if you're not that, as I always say, if you're the dental hygienist living in Williamsport who read Rich Dad, Poor Dad, caught a couple of my videos and got yourself on Zillow and I think I can do this. But you're not going to make this your passion. You want to have margaritas on Friday night, listening to this show. You should be seeking a property management professional. You should be building a team, and you should be finding people who resonate with you and can execute for you and holding them accountable. Here's the thing. You think you found a great property manager? In 15 years, it will look different. That property manager might have sold out. You might be doing things differently. That company might have changed. We've all had great relationships with companies and they change. So we don't buy things because of tenants and who they are. We don't buy things because of property managers and who they are. Those are usually temporary in our long journey. I don't hope to be. I hope to be here forever and ever. But if I'm successful, I am not going to be talking about toilets in my 50s, Gabe. I promise you that. And so it might look like I'm not here every day. But rest assured, my properties are. So there's going to be a bangerang solution here in Williamsport.
I love it.
So my clients don't need to worry. Jen will have her influence here on the portfolio.
There you go. So actually, so I've gone through plenty of property managers. We have property managers for mobile home parks, single family, self-storage, third-party property management. And I've gone through the interview process and selection process and all that stuff many times. So what is, from the other side, what is I guess, the pieces of advice, hints that you could give to people like myself, to others out there who have a portfolio, who are looking for a good property management company? Sure. What should we be looking for when we are interviewing potential property managers?
Sure. So imagining what you want it to be, what participation you want to have in it, be really clear about that, and what's important to you. And almost all investor clients.
I want to jump in there. So you said what participation you should have in it. I don't want to answer for you, but I have experience in this when there is a misalignment in what you think the property manager is going to be doing and what the property manager thinks that they are doing. And so totally understanding what the relationship is and who's responsible for what, I think is extremely important. And I've learned the hard way through this. And so anyways, keep going. I wanted to accentuate that because that is super important.
We think about that a lot because we're one end of the spectrum. I call us a machine. We're not the concierge kind of manager. We're a machine. We're doing a lot here. We're going to be calling you before you're likely ever going to be calling us. If our clients are calling us talking about, are we raising the rent? Is it time for renewal? We're not doing this job right. That is how we believe. So when I'm talking to people and my advice for them, first, irresponsiveness is often the thing that gets criticized with property managers, right? That you, the client, have a need, you want it met as soon as possible. And so I would ask you to be critical of that property manager's responsiveness through the sales time. Take that. That's the only data points you have. And I hear it so often. Oh, I'm so glad you picked up, or I'm so glad you returned my call to a prospect. You're the only one who did. And I say, here's why. All of my competition are realtors. The same license is required in Pennsylvania to do sales and property management. And do you think the $150 commission monthly on your property is competing with the check they're getting at the closing tomorrow? That $5,000 or $10,000 check? And it's okay. Realtors are allowed to do this, but they do it quite poorly. And they only do it to keep their investor from going to another sales agent who will do the management and will get that listing. And so we need to think about that and understand that it is a business and everybody needs to make money. Now, what I'm doing—
That actually is a good call out. I mean, one question that you could ask people that now that I'm thinking about, I should be asking is this your primary focus? Are you also a realtor? Are you also an investor? Like, how many other businesses are you running, or is property management your main focus? And so that's a good call.
Break out your income, realtor/property manager, because if it's 5% of your income, then it's getting 5% of your time and attention,
right?
And it's negligible. They're not investing in that. It's also not sexy. I got to tell you, the activities in doing a real estate transaction versus the activities related to property management, talk about it all the time. It's gritty. We're in the streets. You got to go get a dead dog out of a gutter. You got it's just gross.
Hopefully not.
Well, I don't know. I didn't make that up out of nowhere. We had to do that last week, Gabe. There was a dead bird just this morning. So there's more of that than that kind of a career. So that is one thing. I would also consider who's doing the work, right, on the team. Are they 1099 or are they W-2?
Oh, okay.
Because you're expecting consistency and performance of an employee, not necessarily that of an independent contractor, because your property has, needs, and it needs a lot of attention 1 month and maybe no attention for 6 months. That's the deal here with this. So I would think about that. What I'm doing on my end is I'm trying to gauge the reasonableness of the client. So I'm aiming to operate stabilized properties. I have a standard of properties that work for our system and processes, and I have a standard of client. And I am kind of testing them. I'm not testing them to mess with them.
Well, each party is understanding the expectations, which is
Great
totally
example is the
understandable.
call I had this morning. A gentleman, he has a 2-unit. He lives in one. It's a beautiful unit. He is the worst landlord. He's had nothing but crappy tenants because he's such a nice guy. And he wants to do his own work on the property because he's a contractor and he's made a beautiful property. I said, can you forever and ever keep it secret that you own this house? Because I'm not being triangulated out of this, Chris. And it took him a while to understand, but I said, you get how like it gets awkward when you're drinking a beer at the grill on Friday night and your neighbor starts complaining about the BITCH landlord who won't let him have a dog or his parolee brother can't move in, and how when he finds out you own the house, that compromises what you're paying for. And so anyway, I pushed it a little bit. We tested. He decided he wanted to be on my side of that. He didn't want the alternative. But if he wanted the alternative, we figured that out. One thing I
Yeah.
also would mention to people looking for property managers, I sign a month-to-month contract with my clients, not because I'm a short-term property manager, because I earn your business each and every month. And I'll tell you this on the podcast, I tell everybody and I shouldn't. That option really serves to exist me if my needs, if I've made the wrong choice in bringing you in. I don't
Yeah.
get fired.
Makes sense.
I fire clients out. It's
Yeah.
not a lot, but and that's a real failure on our part. That's really bad. But if I bring you on and you're not able or willing to maintain a property to the right status, then we gotta separate.
Yeah. I like that you kind of use the illustration of a triangle between you and the tenant and then the person who actually owns the property. And that is a mistake that I made once and I have corrected since then. But it was actually with self-storage, making sure that the property manager is the primary contact with, in this case, the boots on the ground. But in your case, it could be, the property manager, the tenant, anything like that, to make sure that it's clear who is responsible and who is the actual decision maker. And if you get, as the owner, if you get in that triangle, then things will get messy. They'll bring things to you when they should be bringing them to the property manager, and it'll just be a mess of communication. And so making sure as the owner, you step out of the communication, the lines of communication, and make sure everything is pushed to the property manager. That's a really important lesson that I learned the hard way. And so it's a good thing to call out.
New investors should get a card with their information, call themselves property manager. Because if you're a 25-year-old guy walking through properties, right, to buy them, and you're talking, the tenants are, oh, you're buying this place? Maybe you're there for the inspection or the appraisal. You can always fire a property manager. You be the property manager. Don't be the owner, because you're probably not emotionally prepared for the kinds of conversations that are going to come up and how you're going to feel about it. And you just need that distance. It's a hot tip. Not enough people do it. Pretend.
Yeah. No, that is a good idea, actually. So let's talk about your personal investing. As a property manager, I'm sure you have a different perspective when you're looking at potential investments. So what is it that you look for? You guys do, I think, small multi, you said 2 to 4 units?
Yeah, I love my 2 to 4 units. I'll do bigger, but 2 to 4 around here is just super common and achievable. Our average cap rates on our multifamilies are 11% on market. So they're pretty, you put a little leverage on that and do some
Your
value
small
add.
multis are 11?
Yes, sir.
Or your large
to get my
yeah.
playbook. So the North Central PA market.
That's better than mobile home.
Yeah. No, North Central PA market. I wrote the playbook. I call it the 2025 No Bullshit Playbook for buying and holding rentals in North Central PA. Get yours for free on holditwithpmgen.com. But you'll see average unit price, $65,000. Average property size, 3 units, 11% cap rates. Brother, it's unsexy though.
That's impressive.
It's unsexy, but it's not C-class housing. This is not substandard housing. This is A and B housing. Sometimes we have to make improvements to get it there because it is old housing stock.
Yeah, what's the vintage? How old are these houses?
We're 100 years old plus. Yeah.
Yeah.
And so here, in my market, my buy box is no flood, because I have a very long time horizon and I believe climate change is real and the waters aren't going down. So I don't mess with anything in the flood. And we're a river valley here, so that cuts some stuff out. I don't want gut out remodels. I don't really pick those up, but I do, like the one I'm buying right now, I'm going to do all windows, redo the HVAC and some new porch floors. But that one, I've managed for 9 years for my client. I already renovated with my construction company the interiors of the 2 units. So One thing about being a property manager is you get incredible deal flow. And that is a perfect example. That owner, who I've known, like I said, for 9 years, I met him in a Landlord 101 class I was teaching. He said, fine, I'll hire you. This is far too hard. We've been working together ever since. And he called me up. He said, it's time to sell it. I go, you're kidding. You're not nearly old enough, Todd. Do not sell it. He goes, I'm over it. I want to sell it. I'm like, fine, whatever. You should put it on the market. He goes, ugh. All my old investors think that by the way, that is where you're going to get your best value. I go, if you don't like that, I'd like to make you an offer. I go, to be fully clear, I'm so weird about transparency. I'm like, this is not a fair market offer.
Yeah.
I made him an offer. He was delighted. I am putting zero money into this deal.
Nice.
So,
I love it.
but listen, we have a relationship. I mean, it's not overly friendly or anything. We respect each other. And I'm delighted to pick this property up after making money on it for 9 years, knowing so much about it. I know everything about it. I know how it's behaved through COVID. I know all the maintenance on it. And so when we talk to property managers, that's our dirty little secret, is that we are often buying off of our clients. And I look at that and go, the client should not just be selling to us. Old investors love ease. And maybe I'll be an old investor who loves ease too, but I don't think
I get
so.
it. I don't want to have to go through the hoops. And if you got somebody who has the money right in front of you, and it's like, it's good enough, is sometimes you're just like, all right, let's do it. I don't want to I don't want to put it on the market and have to deal with that.
Well, and that's something for young investors to hear. Old investors are tired. They will, if you can make it easy. And this has been very easy for this gentleman. This has been a couple of emails. I'm doing everything. I'm making everything happen, and we'll do a closing, and this is easy for him, and very easy for me. But from the tenant's perspective, they have no idea. There's been an appraisal visit and that's it. But they're going to still pay their rent to One Focus and still deal with the same property managers they've always done.
Nothing changes. That is a benefit of starting your own property management company that I don't really think of, is that you're on the front lines. Like you understand these properties, but you also are the first person that the property or the owner is going to be talking to, and so you probably get the first shot at an offer.
And that's just
might not take it, but yeah,
what about prospects? Like the guy I talked to this morning. Now, I think that's going to turn into a management relationship, but it's happened before where I go out and like their situation isn't really prepared to hold, or their goals don't really align with holding. I'll buy it. I'm standing here.
Yeah.
Right? It's happened. I've made offers on things where I went to go get a job and then I'm making an offer, and I know how much people pay for leads.
Oh, yeah, right. Okay.
I'm doing that over the course. So if you think about it, when I look at my whole marketing and advertising budget for my property management company is Hold It with PM Gen. Hold It with PM Gen is growing other income sources besides just new business for One Focus, and one of them being properties I'm acquiring as the region's leading person doing this, leading real estate investor meetups and things like this. So yeah, you pick up the phone, you're helpful, you network, and you get leads.
Nice. I love it.
Yeah.
Well, hey, I just took a peek at the clock. It looks like we have run it down, so it's time to jump into the quick question round. Are you ready?
Yeah, totally.
All right. It starts with education. It could be any form, could be a book you've read, movie you've seen, conference you've gone to, mentorship program you've been a part of, anything like that. I just need 2 recommendations: general life wisdom and then real estate.
General life wisdom. EOS and Traction. Do you know that? Gina Whitman?
Multiple people have EOS. Multiple people have recommended it. I haven't read it, but I've been recommended multiple times.
Okay, if you're running any kind of business, if you've got people you're working with, I almost lost my business because I wasn't a good business leader and I needed the entrepreneurial system to work within. Saved my life, saved my business. I'm so happy about that. And we talked a bit about property management as a business, as a career. There's 2 different organizations to get into. If you want to get into single family management where you're working with smaller investors like I am, NARPM. NARPM, National Association of Residential Property Managers. Fantastic group. Learn a ton. Very well worth your money. The other one that serves the multifamily industry, if you're going to go get a job at like a 300-unit apartment community, that's IREM, the Institute for Real Estate Management. Great coursework, great networking. Dive in. You'll learn so much. You don't have to stay there. You can go do your own thing.
Yeah, perfect. All right, moving us on to the next question. This is for your younger self. So let's go back to the Jennifer who was just graduating. I think you said 2004.
Three I
Go back to her.
graduated, but yeah, 4 into PM.
Yeah. Go back to her, look her in the eye, give her one piece of advice moving forward.
Fear less. Just fear less. That not everyone out there is really capable and smart and doing things the right way. In fact, most people are ding-dongs doing it dumb. Trust your instincts. Learn from smart people. I did all that, but I, for too long, thought because I didn't get what those people were doing, that meant I was dumb. And it didn't. It meant what they were doing was dumb. And my instincts were strong enough at that time, but I questioned myself. So I wouldn't question myself as much.
Yeah, that's really good advice. And it's difficult advice to take if you feel like most of your confidence that you're talking about comes through just going out there and doing it. And if you do tend to think a little bit more, then you're gonna have more fear, more anxiety. You're gonna be less prone to take those actions. But the key is just to take the action, get out there and do it. And then you're going to have the confidence that you're looking for. So, yeah, that's really good advice. Fear less, or at least you can.
Is men and women in this industry. Men are overconfident, get into it, and some make it and some don't. Women are underconfident. It keeps them out of the game.
Yeah. Yeah, that's really good advice. All right, next question is about the U.S. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Williamsport, Pennsylvania, 17701. Here's why. No competition. You've got a bangarang property manager here. From a climate change perspective, it's a safer place to be, right? Not on the coast, none of that. Right? I'm not kidding when I tell you I'm going to live to be 120 years old, and I am thinking on that time horizon with the real estate I'm buying. If I was I don't know how anybody's buying anything on a sea or an ocean right now. What? If insurance doesn't drive you out, by the way, that's driving climate migration. So anyway, you had asked me, what am I excited about my market?
What's your favorite metro?
It's mine, but I would say there's a lot of these. Find good operators or go be the good operator in that small market and clean up. I've only been here 13 years. I had this market licked in 3. Like, you call me about a property, I've been in it. You call me about a person or a situation, I know it. It's just small. I'm not that good. Yeah. It's just small. Big fish, small pond.
How big is Williamsburg? Yeah. How big is Williamsburg?
30,000 people.
Oh, okay. So it's like...
got more than that. Yeah. Like I go like 5 counties truly, but this is where I lay my head and whatnot. That is the MSA you would know by my mind. I call it North Central PA.
Got it. Okay. All right. Next question is lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times or almost every time things go wrong, and that's when we get to learn a lesson. So what was a deal or a property that went a little bit sideways for you? And then what was the lesson you pulled from it?
Every lesson is always like, don't divert from what you know is right. So like you divert on your due diligence out of laziness, overconfidence, time constraints, whatever, you will live to regret that. You buy the property and go, oh, I know I should do this thing, but this is pressing. And you try to stay comfortable rather than like kind of like eating the frog. I always live to regret not just eating the frog. Maybe you've got a problematic tenant situation. Cut it. Don't milk it. It's not getting better. It's not getting cheaper. It's the same logic with like firing, right? When you have a problematic person on your team, after you've had the first thought, they need to get off the team. Every minute after that, it just got worse. And that is, what I come away from. Anytime a deal's going wrong, it's been like, I was lazy. I took a shortcut.
You knew it already and you took too long.
And I'm the only one to blame for that.
Yeah. And that happens even before you get into deals, like especially if you haven't closed down a deal in a bit and you just are really itching to get something done. Sometimes you'll look at a property, you'll be like, all right, this isn't exactly fit my criteria, but it's okay. I think I'm going to go through with it, but you will regret it. Stick to your criteria, stick to your underwriting, your due diligence. Do not waver because it's not fun to get into something that starts to become a headache.
It's so hard to make real estate your like transactional and acquiring your primary thing, because the market doesn't always mean you're going to be doing those activities. So one nice thing about the property management business is it keeps me busy. It keeps money flowing. And when properties are good and available, by the way, we're going into a really nice time where they're going to be. COVID, I couldn't buy anything. Everybody had dumb money. And now that's cooled. It's cooled. The dumb money's gone, the cheap money's gone, and the spreadsheet monkeys are out. I always say my dog could make money on a 3% loan. So those guys are out. Like I said, I'm getting 11% cap rate, so my new 7% loan isn't bugging me too much. But I mean, these are really good points. It's not that bad. So anyway, that's what we're into here.
All right. This is the second to last question. This is about raising capital. Actually, you're in the 3 to 4 unit range, so you don't really need to raise capital. If this does apply to you, what is your favorite way to raise capital?
I just go out and make some money and put it in the bank. But ideally, like I like the 2 to 4 unit off market deals where you're just doing creative financing. I think I shared with you before we got on this 2 unit I'm buying. Nothing down. Yeah. Even the renovations are financed.
Did you sell or finance that?
Not the whole thing. I used the bank, but I just did 25% seller finance. The rest is with the bank, including the renovations. And so I'm not taking anything out of my pocket, which lets me be a little bit more bold with getting the things done. So I got a little safety net. And if another one comes up, I can use the cash on that.
Perfect. All right. That leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Oh, well, get on holditwithpmjen.com and on all the socials, Hold It with PM Jen, 1 N. And what they're going to find there, a lot of educational content for the do-it-yourself buy and hold investor. It's motivational, it's educational, and you'll find information about my North Central PA market. I do publish that free. I call it the 2025 No Bullshit Playbook for Buying and Holding Rentals. And it's because I break it down to like, oh, this municipality, Bloomsburg, we've got a problematic codes guy named Kyle. Kyle's not going to want to find me in a dark alley, right? And I talk about Kyle and how if you're going to buy in Bloom, know this, and this is how you handle that issue, right? Like he's overambitious with the improvements he requests. So get your playbook, follow me on socials. And if you have a property in North Central PA or you have questions, I also published on YouTube a 4-part series on evictions, and people will call me and either tell me that it worked for them or they had a follow-up question. I had a guy earlier this week do that. And I love those calls. I love nothing more than helping you kind of like gear up. As I say, nut up and take care of it. And that's usually the talks I'm giving people. So Hold It with PM Jen. Find me there.
Perfect. All right. I will put that link in the show notes. So if y'all want to reach out to Jen, all you got to do is just click the little more in the description. It'll pull down that full description in there. You can find her links. All right, Jen, that wraps it up. Thank you very much for hopping on the show.
Thanks, Gabe.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.